Hi, what's up guys? So I want to show you a very simple setup that can be used to make your entries while trading the demand and supply. The same concept can also be used probably for other methodologies, let's say like support and resistance. So myself, I trade the supply and demand, and when trading supply and demand, this is what usually happens. This is the impulse move and this is the corrective move, leading to a break of structure when we close above that. So another correction move or a retracement. Now when this retracement is happening, you want to make sure that the retracement happens on a demand zone. So if the market gets back to the demand zone, then this is the time that you want to be interested in this move. So figure it this way. So the market has arrived here, has done the break of structure on the left, and now the market is approaching the demand zone again. So what you do is, during this leg here of pullback,
have you had all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
Thing is that you never know where the market will end the retracement. The market might end the retracement even halfway before before even arriving at the extreme demand zone, because there are also different types of demand zone that can be found in between this move here. So, but myself, I want to focus on the extreme demand zone. So once the market approaches the demand zone, now you want to go and switch over to the lower time frame. Specifically, I want to pair in 4-hour time frame with the M15 time frame. So, and that the market is a fractal. If you've been trading for a while, you'll know that the market is a fractal. Therefore, it means whatever happens on the higher time frame also happens on the lower time frame. So the market never moves in a straight line. So the market moves in with higher highs and higher lows, or lower highs and lower lows. So, and this is the kind of movement that the market makes. Now, on the lower time frame specifically, you want to focus on this pullback as the market approaches the 4-hour demand zone. And this is the kind of setup that you will be looking for in the lower time frame. So you'll be looking for the market making lower highs and lower lows. Sometimes most people will even confuse this as a change of trend, simply because it's happening on the lower time frame. So what people don't know actually is that during this pullback phase, between this point here and this point here, when you are on the lower time frame, let's say 15 minutes or 5 minutes time frame, depending on the the size of the pullback, you will find that it's an old trend by itself. However, we don't want to capture or go against the trend. For us, we want to capture the movement from this point here to this point here. So once we arrive to the higher time frame demand zone, or what we call the point of interest, then you want to jump lower to the M15 or to the lower time frame, let's say M15, and you want to see a shift in market structure. So I know you guys, we have covered a lot about the concept of the market structure. And the same thing that happens on the higher time frame also happens on the lower time frame. So you want to see a change in market structure, what we call the market structure shift, or again we can call it the change of character, or in the traditional price action terms, we can call it market or structure invalidation. The trend invalidation concept. So this is what is happening here. So the market is doing a break of structure as it goes down. This is a break of structure, another break of structure, another break of structure. But once the last lower high is broken now in the lower time frame, this is what we call the what? The choke. So once these once this thing happens here, once the last lower high has been broken vigorously by this move here like this, then this is what we call the what? The change of character. So this is a change of character, and these ones that were happening on the other side is just a normal break of structure. So let me mark it, break of structure. So this break of structure, and even the one before that had happened is break of structure. But once the market breaks the last lower high, then that is a change of character. So once the change of character happens during this move here, now you know that the trend, the lower time frame trend wants to align with the what? With the higher time frame trend. Are you getting me, my people? So you already know that once this setup happens now, the lower time frame trend or direction wants to align with the higher time frame trend. Remember, we've already captured the bias that in the higher time frame we are what? We are bullish. Now we want to see when the market on the lower time frame is also changing, while during the pullback phase is also changing what? Bullish. And this is informed by this change of character that is happening here. So once you have your change of character, then you can target, you can look for a lower time frame demand zone from this point on, and this is where you'll be making your entry. And basically your entry will be here, stop loss just below some few pips here, and your take profit will be on the what? Maybe based on 1:2, 1:3, whatever you like, or the previous H4 structure that has been happening. So basically your trade setup here is what you will have on these points here. So on this point here, this again, your setup on the higher time frame will look like this. So you want to take your profit on these before the BOS, because that is the highest point of the what? Of the 4-hour time frame setup that is happening. So the same thing that you want to do here now, because this is the lower time frame, it will have many break of structure, higher highs and higher lows, that is on the M15. But you want to make sure that you align with the what? With the highest level on the left on the 4-hour time frame. That should be your signature setup. So I want to show you on the sell side how this happens. So again, this is now on the sell what? On the sell side. So when the market is bearish, so you want to make sure that the market is making lower lows and lower highs, and during this movement, we will have the market doing what? The break of structure. So anytime the market breaks of structure, then you know that the market will be pulling back, and you want to be selling on levels of supply, or rather where the big boys are selling. And now a level of supply is where sellers are more than the buyers. So you simply want to put your position here, and you will be targeting probably this low as your target. Now, how do you time the setup? Because you will be basically be making your entry there at that point, probably your stop loss there, and then your take profit on this point here. Now, how do you time that particular this setup so that you can maximize on it? As we make this pullback here, that is from point A to B, we will be having this kind of movement. So on the lower time frame, on the M15, this is the structure on the 4-hour time frame. This on the other side is a structure on the what? on the M15. So the market will be making higher highs and higher lows on the lower time frame. So once we have we have break of structure here as we move up. So but once we have the last lower high being broken, then that is the change of character. You want now to be capitalizing on what? On this movement there, and that will be your setup. So you want to make sure that you also go to the lower time frame and spot the what? The M15 mini what? The M15, sorry, you want to go to the lower time frame and be able to spot the M15 supply zone, or the lower time frame supply zone. So once we have the change of character and the market price gets back to the lower time frame supply zone, then that is your selling point, that is your entry point, and you will be putting your sell order on that particular level, stop loss just above the structure. Then you will be targeting this low on this side. You'll be targeting this structure on the 4-hour, or rather whatever is your higher time frame, but probably your 4-hour time frame. So that will be your target. So that will be your signature setup on the what? On that particular market. So now I'll be taking you to this setup and how it has happened, and it's a trade that I'm already into, so that you can be able to see it practically from the candlesticks, from the charts, or rather. Now this is the GBPUSD, and from the higher time frame, this is what I was looking at. Remember, I've said that the market will always make higher highs and higher lows, and in an uptrend, and when the market is in a downtrend, we'll be making lower highs and lower lows. So as you can see, the market was making higher highs and higher lows. So even at this point, we had some form of equal lows here. So the market tried to push higher, but it was not able to, which led to what? To now the break of this last lower high. And basically, this is what we are calling the what? The change of character. So once this happened here on the daily time frame, then that is our change of character. All right, so once we have the change of character now, one thing is definite, is that the market is changing in the what? In the trend. So once we have this invalidation, the uptrend invalidation here, then we are no longer looking for buys, we are looking for sells only. And no, going to the higher time frame, so where do you want to sell, or where do you want to position yourself in the market, so that you can take advantage of the downward market, that the downward direction of the market that it's making? So you want to go and mark you want to go and identify the what? Your area of supply. So for instance, these are supply zone from the daily level, and also if you go to the 4-hour time frame, actually from the daily is where it is very clear, because we can see that these change of character was started from these points here. So this was the start of the move, and this is the end of the move. Now the market has been making the pullback, of course. So once you identify your ideal supply zone, now marking it from the higher time frame, so you can mark it from the daily, but you can basically go to the lower time frame to refine the level. Maybe there. So, and once the market now is making this retracement here, and especially on the lower time frame M15, you'll find that it's a old trend on the M15, but because you are using a what? You are using the higher time frame bias, then you already know that this market is going bearish, like we want to be sellers in this particular market. So therefore, what you'll be looking for is, once the market arrives at this point, you'll be looking for this change of character, and the market to continue with the what? With the selling on this other side. So this is the kind of setup that we will be looking going to the lower time frame. So now we've already done our bias from the daily time frame that we know that the market is going down. Now we go to the lower time frame, which is the 4-hour time frame. Now 4 time frame is still a higher time frame. We can go now to the what? To the even on the 4-hour time frame, we already have now what? Another break of structure. So this is how you can also do a multi-time frame analysis. So you can see here already we had our what? Our break of structure. So once we had our break of structure here, now you already know that we can even delete these daily supply zone. We can actually use the most recent price action on this particular setup. So we have a supply zone on the daily. On the 4-hour again, we have this kind of setup, and we have a break of structure on the 4-hour time frame. Now, when the market was pulling back from here to here, we were looking for sales. Okay, so you can go now down to the what? To the M15. So you can go down to the M15, and on the M15, what you want to capitalize on is the market making higher highs and higher lows, mini higher highs and higher lows, like this. As you can see, it's a mini trend. And now if we can go to the lower time frame, I want us to be able to spot the mini trend from this point on to that point on. So let's go to the jump onto the M15 and try to spot what the market was doing as it was approaching this level. So the market was making higher highs and higher lows. So you can see here the mini trend. Somebody might be tempted, to jump on this trend. So as you can see here, we had quite a move before the market broke this, actually this one. Just a minute. Before the market broke this last lower high, this is where our change of character is happening. So this is a change of character. You have to be very keen to be able to spot it. Now once the market gets back to the mini supply on the lower time frame, this is the lower time frame supply. That is where we want to wait and stack our position. Then we want our stop loss just below now this high, like that. And then of course you want to go to the 1-hour time frame or 4-hour time frame. You want to be you want to be where this BOS was happening. You want to be to be targeting this zone if your entry is at that particular point. So as you can see, these are 2.94 setup on GBP USD. Now we have already again made a BOS break of structure here, the market pulling back. Again, if you go to this point here, you want to identify on the lower time frame, you want to identify while the market is making a change of character, maybe on the 15-minute or even the 5-minute time frame. That would be your ideal your ideal entry point in the market. So you can see the market trying to push again. Then from there on, we had this sharp move. This is where your change of character is happening. This is where your change of character is happening. And once we have that change of character, now you can identify the lower time frame supply. Sometimes the market might not be able to pull back to all the supply zones. These are lower time frame supply. Other times you might also use the Fibonacci. You might target the 61.8 or from the 50 or to 61.8 level for your entry. So this will be again your entry point. Stop loss above there, and you ride the move going down. So this is a move that I've been having on GBPUSD. The trade setup is still running. So I'll take you to my analysis because I had already sent this setup. So this is the ideal setup that you want to be you want to be trading day in, day out. If we can go to the MT5, then you can be able to spot this beautiful setup. So as you can see from the 4-hour time frame, that's how from the daily we were looking at a break of structure here. We were looking for the market to sell from the immediate supply zone that led to this break of structure going down to the 4-hour time frame. We were timing the setup from this level here. And then from the M15 again you go and look for a change of character, and once the change of character happens, then you want to ride the move down. So this is a setup that I've been holding.
Have you heard all the Forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
Since yesterday, and these are the kind of setups that you want to be looking for each and every day. So the setup right now is at break even, means that my stop loss is just below the entry point. So I'm not worried about the market taking me out, because even if I'm taken out, there will be no impact on the P&L of my account. So, and the target is down here. So I hope this impacts, or rather changes, how you view the market from the higher time frame to the lower time frame, and also making your entries with confirmations. This is what we call the confirmation entry, unlike whereby you just sell using buy limits or sell limits from a demand or supply level without waiting for confirmation. This is the confirmation model of trading using demand and supply, and at the same time applying the multi-time frame concept. See you on the next one.